So the wait is finally over, everyone. Once again, it's time to unveil my entire portfolio from A to Z, and I'm talking about all 6 of my investing accounts here. So if you're new to the channel, welcome aboard. The mission of this channel, my mission, is to help ordinary, regular, everyday working people on how to invest on their own in order to build their own stream of passive income and eventually become financially independent one day. So I don't just talk about it, I actually show you guys how to do it because I've actually been living the dream since December 2019. So if you're watching this video, first of all, make sure you're watching my latest portfolio unveil update video. I usually do one a month. So this video is update number 12 for March 2022. I actually have a YouTube playlist, by the way, dedicated to all my portfolio unveil videos in chronological order. So make sure to check out that playlist in case you want to check out, my entire journey, which I share with the world. So if you invest in the Canadian or the American stock market and you like this type of content, DIY investing, you're thinking about investing on your own or already doing so to try to achieve financial independence, it's really important you consider subscribing to my channel because my investing style is really, in my opinion, the best way to achieve financial independence as quickly as possible. So that would be the passive income style of investing. So just a quick reminder, everyone, on my investment strategy and a few important reminders before I unveil everything. So please listen to this part if you're newer to the channel because I will cover many of the common questions I get when I show my portfolio. So first of all, I'm Canadian, so most of the funds and stocks in my TFSA, which is a tax-free savings account, and my non-registered cash account, they're listed on the TSX, right, on the Canadian stock market. So don't exit the video, however, if you're American or you're outside of North America and you invest on the American stock market, because for my retirement accounts, mine and my wife's account and my account, we invest exclusively in the US stock market for those accounts. This is simply because as a Canadian, there's no additional withholding taxes to pay on the income in a registered retirement account like the RRSP or the Lira. So stick around if you're American because starting now I'll always show my retirement accounts as well. So you will see what my favorite US listed funds are designed for high income. So a quick note on my investing style now. I am a long-term buy and hold income focused or income oriented investor. So the primary objective of this strategy is really to generate high and consistent passive income via dividends and distributions every single month as safely as possible. So most, if not all my returns, everyone, does not come from capital appreciation or share price increase. It comes from the income that my portfolio generates on a consistent basis. So I know this is very, very hard concept for people to understand because all you ever hear about and read about in the media is really about growth and growth stocks, capital appreciation, right? Buy low, sell high later. And because basically I never sell anything. But there is another way to make money in the stock market, everyone, where you don't really care about share prices or your faith is not tied necessarily to share prices, and that's my way, the income style. So how do I achieve this in a safe manner? Well, my portfolio primarily holds funds, so ETFs, closed-end funds, etc., that invest in blue chip dividend stocks and that use income enhancing strategies like covered calls and leverage. So they provide fairly consistent income, and the intent is really to hold them forever, right? Not trade them later on for a profit and simply collect the passive income forever. Very, very simple, very, very efficient, and hands off, of course. That's where the passive comes from, right? So this strategy really enabled my wife and I to become financially independent in our mid-30s back in December 2019. You could always check out my financial freedom journey video if you're curious to see our whole journey. So in short, my strategy is really not that fun or exciting or mainstream, but I could promise you that it works. You just have to stay focused and disciplined. Slow and steady wins the rat race. Also keep in mind, I'm not against the more mainstream growth strategy where you just buy, you could just buy popular big index ETFs like from Vanguard or iShares. And I am not against another popular strategy, which is a dividend growth strategy where you're focusing on dividend stocks. So either you hold the dividend stocks individually or you're focusing on the dividend themed ETFs. Whether it's income strategy, the growth strategy, or the dividend growth strategy, which is kind of in between, they all work long term, right? As long as it's you keep in mind it's investing in quality, not speculating or penny stocks, right? So what exactly will I show you in this video? Well, I will quickly show you my 6 accounts directly in my TD broker to prove to you that my portfolio is 100% legit. The numbers I'm showing you and you see in the title and the thumbnail are 100% legit. Then I will show you my portfolio in spreadsheets, right, in Excel, so it's much easier to digest everything. I'll go through each fund one by one. I'll tell you about any changes I made from the last portfolio video as well back in January. And also keep in mind that you could download the spreadsheet of my entire portfolio that I will show you right now for free on my website. Go on my website, passiveincomeinvesting.ca, and go right here, free tools and resources. And the very first download, this is the old one, but it will be updated, will be, you'll be able to download my entire portfolio by clicking on this button. Just don't use Firefox because it doesn't work. Use any other browser. So download it first if you want to follow along, because it might be too small for you to see. This is where you get it. So without further ado, guys, let's check out my entire portfolio. I'll show you everything from A to Z, starting with the brokers. I just want to take a quick moment to thank the sponsor of this video, Harvest Portfolios Group, one of my favorite Canadian fund managers, really specialize in income-oriented ETFs or covered call ETFs. I own many of them myself, and they actually just released a brand new all-in-one income-oriented ETF called the Harvest Diversified Income ETF. The stock symbol is HDIF, which targets an 8.5% yield annually. So make sure to check out their website and their fund lineup. The links are in the video description below. All right, everyone, so let's get to it. Like usual, firstly, I'll show you my homepage of my broker. I'll show you the 3 accounts, and then I'll show you my wife's broker as well. So here's the total. Here you have the total balance of 712. And now let's go through each account one by one, starting with the cash account. So here's the cash account, guys, for me. Keep in mind, I'm showing you this real quick just to prove to you that what I say is legit. Don't forget that after we'll see the Excel file with everything together. So this is just sorted to from my biggest losers to my biggest winners. Not that I care. Overall, the market's doing really well. So this account I'm up on. So now let's check out real quick the TFSA. Here's the TFSA, everyone. So this one, I'm actually down a little bit on it because of the Ether. I have all my Ether position here. So here's what I hold in my TFSA currently. Last but not least, let's check out the RRSP. So last but definitely not least, here is my RRSP, all U.S. funds. So since the RRSP doesn't have 15% withholding tax, we decided to go just with U.S. funds, and it's sorted from my biggest investments to my smallest. So we'll go through them, of course, one by one when I show you the Excel file. So I won't go through them here. So yes, you could see that ORC is definitely the biggest loser right now at minus 33%. I'm not selling it. I'm not going to panic sell it. So I'm just going to hold firm. I'm still making a yield of over 10%, believe it or not, even with the 2 dividend cuts in a row that it did. So I'm going to hold firm. It's just, MBS, mortgage-backed securities, are not doing well now. That's even why OPP is suffering a little bit, because it's heavy on the MBS. So here's the RSP. Let's check out my wife's account now. So here's Erica's account. This is the snapshot. So as you can see, there's 536 here. So if you add this amount to my account, the amount in my account, which was 7 something, you'll get 1.2 mil. So there you go. I'm just showing you that what I'm saying, and the picture on the thumbnail is true. So let's check out the accounts one by one now. So here is the cash account, Erica's non-registered account. Every single thing in here is at a gain. So as you can see, overall gain 57K. Don't really care. So it's sorted from my smallest gains to the biggest. So these are the position. CLM being the last US fund I have in my in either a TFSA or cash account right now, but that's probably going to change soon. So let's move on now real quick to the TFSA account. TFSA account is here, doing better, much better overall than mine account. This is where I actually have all or almost all my ENS exposure. So huge chunk in ENS here. This is where I keep it. So as you can see, most of these positions are doing really well because I have the Canoe, the 2 split funds that focus on financials, Inc.UN. So very financials heavy. This is why the account is doing pretty well. So let's move on to the RSP real quick. Here is the only account that I drip, that is on drip. So this is my wife's RRSP account. Very simple. stock selection here. I wanted quality. I wanted something that I really don't need to monitor. Just turn on the drip and forget about. So you have QYLD, RYLD, RA, RIV, and GOF, 5 of my favorite US listed funds. Overall, it's down because, especially QYLD. But seeing this actually makes me very, very happy. And that's not because I'm insane or anything, but that's just because this account is simply on drip and it's an RRSP. We're not going to be needing this money or touching it for years and years, if not decades. So it's actually better if you're dripping an account, by the way, for it to go down or to be down, because now you're just buying units cheaper, right? It's like automatically dollar cost averaging. So that's, next round of dividends, I'm getting units much cheaper than my average cost. I'll get QYLD at 2078 instead of my average cost of 22. So I get more units cheaper. It lowers my average cost base, increases and compound interests my account, basically. So now let's go through the whole thing in Excel, where of course I'll go through a little bit more detail of each position as well. All right, everyone. So let's condense all this information together and look at it from a bird's eye view. So the first thing I'm going to cover is our RSP accounts. So the way I set up my portfolio to manage the accounts is my wife's TFSA, my TFSA, are my non-registered cash and her non-registered cash. That's combined in what I like to call here my main portfolio. So as you could see, TFSA plus non-registered. So those 4 accounts are combined in this portfolio, which I consider my main portfolio. And then the RRSPs are separate. You have the 2 RRSPs here. So let's go through the RRSPs first. I'm sure my American friends watching, this is what you're most going to be interested in, because this is where we invest in US listed funds exclusively. And once I'm done, I'll cover the main portfolio. And just a reminder, guys, don't forget that you could download this if you're having trouble seeing it. It's too small. You could download this for free on my website, passiveincomeinvesting.ca. You go to free tools at the top, and the very first download will be this Excel file where you could check it out yourself and download it yourself. So RSP, I don't do crazy amount of tracking. I do a lot more tracking on mine than my wife's, because my wife's is on drip. So all I really calculate is how much money that I put in my whole life in the RSP, and how much is it worth now? What's the value? This is because no money is coming out. I'm not touching any income. So it's very easy to figure out how your RSP is doing by knowing how much you put in versus how much it's worth. So that's basically the only thing I cover here, or I look at. So let's go through the positions one by one. So I did make a couple of small changes. I basically got rid of RIV, and so RIV is the River North Opportunities Fund. I really like it. I sold it to make a little, contribute a little bit more to OPP. So I have OPP is going to be what I'm trying to say is OPP is going to be my River North product in my RSP, and RIV is going to be the one in my wife's RSP. So there's no reason for me to have RIV, so I sold it. That's basically what I'm trying to say. So my biggest position is RIV in terms of how much money I put in. OPP, not RIV. So I'm making a good 12% yield on that. CLM, of course, is here. Very, very aggressive, controversial fund that has a very, very high yield. With the distribution increase this year, I'm actually making a really crazy 18% on it. So it's $363 a month on CLM. Really, really good. Trading at a big premium now. I wouldn't buy this right now because it's trading such at a really, really big premium. But OPP is actually kind of like an ugly duckling right now, and it's trading at a small discount. So OPP is what I would pick up. If ever you're watching and you want something US to pick up, it's a good pickup. QYLD, RYLD, of course, staples. These are very, very, very big positions in my wife's RSP. So I decided, I'll just cap them at 15K each and just leave them there like stabilizers, but I probably won't be adding much to them because like I said, the biggest account percentage is in the wife's account here. So of course I have RA, same thing. This is, RA, I love it because it's managed by Brookfield. I trust them when it comes to real estate and infrastructure. So this is literally called the Real Assets Income Fund. It takes care of all your real assets needs. So it has real estate, natural resources, infrastructure. It's leverage. It's a monthly payout. You got about 11-12% yield. Really, really good one. Probably leave it at 20 for a while here. But this one is also in my wife's account. SVOL, this is a new one that I discovered. Actually, it's not that new, it's 6 months old, but I've been keeping my eye on it. Really, really cool concept. I'm actually trying to get an interview with the fund manager to really ask them questions on how they came up with this. It's a very cool strategy. It was my US stock pick for my stocks of the month. stock picks of the month video for March. So make sure to check it out. So really, really high yield. It holds nothing. All it does is it shorts the VIX. So it collects premiums by shorting the VIX, which is a volatility indicator or index. And to, just in case the VIX spikes, which would happen if there's a market crash, to protect themselves, they buy a call option to protect the fund. So really, really, really cool. 6 dividends are out and they've all been really, really high. And as you can see, I'm actually making almost 17% yield off this fund, off this ETF. Really, really cool. ORC, I already discussed a little bit. So it cut its dividend again from 66 cents to 54 cents annually. I think it's the lowest it's ever been. MBS is suffering right now. These guys borrow money, don't forget, to invest in mortgage REITs. So they're getting kind of squeezed. But I'm going to hold on because regardless, I'm still making 10% yield, 140 a month. Highland Global Allocation Fund has done really, really well for me. It has a dividend I've increased my dividend because this fund resets their distribution annually based on the NAV. So whatever the NAV is, they take 8.5% of that, and that's the new distribution for the year. So for 2022, it went up 85 cents and 97 cents. And right now, if they would reset it again, it would go up again. So I'm making a cool 12%. For some reason, this fund is always trading at a big discount. I don't know what the deal is, why people don't like this fund, but I'll tell you something. I like it because it's been very, very consistent for me. And even now, you'll get about 10% yield or something like that with it. And the next two are my ETN. So I have one for silver and one for oil. I'm probably not going to be adding much to these. These are really niche funds or niche products, but really good yield, especially the oil one. The oil one has phenomenal yield. So this is actually the yield based on the last dividend. Keep in mind these two, right? It's an ETN. Their monthly distributions could really vary, so it's very hard to track your income. But these yields are based on the last distribution. So the oil one, pretty crazy right now. So that's my RSP, and to be honest with you guys, my RSP is kind of where I have fun, right? I'm not going to be using this account for a long time. I'm not touching the income, so this is why I have a little bit of more of experimentation. I go for a little bit more crazy stuff like the ETNs, like ORC, like SVOL, so I like to experiment with this one. My wife's account, on the other hand, her RSP is a little bit more. I wanted to keep it very safe, so I just don't have to manage it because it's on drip, like I said. So you have how much we put in, how much it's worth now in USD. And like I showed you guys, it's just QYLD, RYLD, RA, RIV, which is a nice counterpart to OPP. So RIV is really cool because it's a closed-end fund that holds other closed-end funds. It's kind of like an all-in-one closed-end fund solution. Really cool. Kind of reminds me of HDIF and HDIV and HYield. And then I have GOF, which takes care of pretty much your fixed income. It has high-yield corporate bonds. It has bank loans. It's mostly fixed income. And GOF, really performed well. Their numbers and annual returns don't lie. It's like over 10% a year on average. Very hard to do for a fixed income fund. So GOF, I'm a fan. It always trades at a premium though, so be careful getting in. Always make sure when you're investing in any closed-end fund, check what the NAV is before you invest. You don't want something trading too much at a premium like CLM right now, right? So together, our two RRSPs, mine I manually drip, you could say. My wife's it's really a drip for real. Together they make 33.29 USD together. So this is the RSP. Let's go over the main portfolio now, what you guys have been waiting for. So this is, like I mentioned earlier, our two TFSA accounts, our two cash accounts combined together. So we'll go through every single one of the funds. I'll tell you about any changes I've made as well. So I think to make things easier, I'll show you right off the bat because I made a lot of changes this month. We'll start with the actual changes. So I'll just hide 2021. So 2022, this is basically the changes that I've made and that you guys don't know about. So let's go through each of them together. We'll go from February. It was very busy February, so I am consolidating. I'm streamlining. Just like the video I released 2 weeks ago. Should you sell your single covered call ETFs for the all-in-one funds? I'm starting to go that route. Will I do it for all of them? I'm not sure, but this is what I did so far. So I sold off my TXF, which is the tech one, CGXF, which is precious metals, HHL, as well as a little bit of ZWG. I don't really remember why I did that. And I swapped all that into HYield. Of course, by selling them, I realized some gains here. So I swapped all that into Hamilton's new all-in-one fund, HYield. The second thing I did was I sold half my ZWU, which is utilities, and HUTL, which is also utilities, for the new all-in-one fund HDIF. HUTL is already in HDIF and has a lot of utilities, so this made sense. And I also sold another single REIT. So like I keep mentioning to you guys, my goal is eventually to have no single stocks, no single REITs whatsoever. So I sold in Novalis. I had a nice gain on it, so I sold that. So what did I buy in February? 50K of HYIELD, 30K of HDIF. I got a little bit more Bitcoin and Ether, and I also added a little bit to ENS and DGS. So that's what I did in February, fairly busy. In March, I sold another REIT, single REIT, Slate Grocery REIT. I had a big gain on it. It's had a really, really nice run. It's a perfect time to sell it. Don't be afraid of selling your single stocks, guys, if you have capital gains on it, to swap for higher yielding funds. This is what I did. So Slate Grocery REIT is gone. I sold off my remainder of HHL, healthcare, and I also sold off ZWK, which is the US bank. So I allocated it accordingly. So a lot more in HYIELD, 25K more in HYIELD, 15K more in HDIF. So that's where the ZWK comes from. So ZWK is US banks. HDIF, one of the ETFs in there, is US banks. So I had a 5,000 gain. So bank 15 in HDIF, and then with the HHL, Slate Grocery, they both had profit. I distributed it to HYIELD, and I got a little bit more Bitcoin, a little bit more real estate, and a tiny bit more Canoe EIT. And that's just to satisfy my OCD, which we will see in a second. So here is the portfolio, my main portfolio. So this is the current state of affairs, guys, for my TFSAs and non-registered together. Let's go through it one by one. We'll go through each fund, starting with the closed-end funds. So keep in mind, again, you could download this for free on my website, but I'll just go over it quickly. So you have the name of the fund here. You have the stock symbol, which is a hyperlink. If you click on it, it brings you to the fund's website. That's where you should do your research. Just a quick one-liner. I like to say what sector the fund focuses on, and just a one-liner of what's in there. Total invested, this is how much money I put in. Okay, not how much money it's worth right now, how much I invested of my own money. Weight according to the total portfolio, number of shares, book price. So this is my average cost base, my book price. And of course, this is my yield, not the current yield, but of each fund, but my yield, which is based on my book price. Annual dividend, this is the annual distribution or annual dividend rate per share. So this is what's really important, enable for you to calculate the yield, and the annual income and the monthly income, which is just the annual divided by 12. So let's go through them one by one. First, of course, you have Canoe Financial EIT Income Fund, my favorite closed-end fund of all time, the OG of my portfolio. Like we just saw, I added a tiny bit there just to bring it to 55, a nice even number. Yes, I do have OCD with numbers. I like things even. So here's the weight. So yeah, it's a really big position, obviously, in my portfolio. Obviously, if you see something, 55,000, anything 30,000 and up, it means it's a really nice position or a big position. It's a key focus of my portfolio overall. So obviously, I really like Canoe EIT. It focuses on North American blue chip dividend stocks. This is an actively managed fund, so it's not really a covered call fund, but it's a closed-end fund that uses leverage managed by people who really know how to stock pick. The stock price in the last year or two doesn't lie. It's been doing phenomenally, and the dividend has been $1.20 a year, 10 cents a month for like over 10 years. So a really cool 11% yield here. DS and Inc.UN are the only two closed-end funds from Quadravest that are not split funds. So DS focuses on Canadian dividend stocks. It's literally a twin brother of DFN, Dividend 15, which is their flagship split fund right here, which I'll talk about in a second. Except it's not a split fund, so you don't have that split fund danger of missing dividends. Inc.UN, same style. It's an income trust. This is an income corporation. That's why there's DS here, and there's Inc.UN. So it's trust has to be .UN. Corporation is basically just listed like a regular stock. So that's why you have, EIT has the UN and the Inc. has the UN, which stands for units. The DS does not. So Inc.UN focuses just on financials, 60% US, approximately 40% Canada. So these two, as you know, have a very unique and specific dividend policy where the dividend follows 10% of the stock price every month. It changes every month. So the stock price keeps going up, the dividend goes up. If the dividend goes down, if the stock price goes down, the dividend will go down. So because these two are really high, my dividend yields are astronomically through the roof here, which I'm not going to complain. They're both trading at big premiums. However, while DS is actually starting to go down a little bit and it's trading at about 10 or 12% premium. So DS might actually be a good pickup right now. But Inc.UN is still trading at a very steep premium of like, I don't know, 90% or something like that, 80%. So I wouldn't pick up or wouldn't touch Inc.UN right now. Doesn't mean I don't like it. I just wouldn't pick it up yet. But DS is looking more and more interesting. CLM, the last one, is my only US listed fund in here. So of course I have to pay that 15% withholding tax. But even with that, I'm still making 15% yield thanks to the dividend increase for 2022. So those are my closed-end funds. Let's go through my ETFs, which the list is a lot smaller if you notice because of all the changes and all the streamlining I did. So the first three are from BMO. So you have ZWC, which is basically the best Canadian dividend stocks, all in one ETF with covered calls. There is no leverage on this fund, so very, very classic. ZWG is global dividend stock. So there's about 50 stocks in there. So in here you have mostly US, but there's also Canada and Europe. So this focuses on global dividend stocks. So really good regional diversification here. ZWU, of course, very popular. It's the utilities one, so focuses on utilities, telecom, and pipelines. I still have a 10K in each of these three. So ZWU, like we saw, I cut it in half to invest in the HDIF fund, which I'll talk about soon. They're coming up. So NXF is the last single CI global asset management ETF I have. It's been doing phenomenal. Of course, it's NXF, it's energy, it's the global oil and gas producer giant. So Suncor, Canadian Natural, Shell, BP, Total, Chevron, ExxonMobil, etc., etc. Only the 16 big oil, basically big oil, been doing really well. I think I have like a 10,000. It's worth 30,000. I only put 20 grand in here. They just announced their March dividend, which is slightly higher than the last one. So keep in mind that this dividend is just the average of the last four dividends, which would give you an annual dividend. So I'm making good yield on it, 11%. So now let's get into the three, I would say, key players in my portfolio, along with EIT. The next three are the all-in-one covered call solutions, which I love dearly. So first you have the Hamilton ones, the brand new one, Hamilton Enhanced US Covered Call. So in here, these are the ETFs you have: QYLD, RYLD, XYLD. So you have the three big indexes in the US. It's like investing in the whole US market. But they also added 4 specific covered call ETFs. You have HHL and HBF from Harvest, which are the two most popular ones, the brand leaders and the healthcare giants. You have TXF, which I had and I swapped out for this fund because it actually has TXF. So you have the best technology companies in there. And of course, you have, just like HDIV, they added HEP in there, which I love. It's like a stabilizer, gold and precious metals producers. I really think that's a really good idea. That's why when the American markets goes to hell and gold goes up, this it helps H yield not to go down that much. Not that we really care about stock prices, but I just found that adding the HEP is a really nice touch. And they did the same thing for HDIV. So HDIV is the enhanced multi-sector covered call one. So it focuses a little bit more, tries to replicate Canada, the Canadian market, whereas H-Yield tries to focus more on the US market. So H-Yield is a lot more tech heavy than HDIV. HDIV, you have the 6 banks, you have ZWU, you have the life insurance companies, FLI, NXF, the global oil companies. Those are the CI ones. And then you have HHL and HTA, healthcare and technology. So really, really awesome 2 funds here. They're one of my favorites, and obviously you could see from the position, right? Really big positions here. HDIF is also cool. It just came out. It's brand new. Just made a video on it last Wednesday. It has HHL, the healthcare, HBF, the brands, HTA, the tech, HUTL, the utilities. I really like that. And HUBL, the US bank. So like HYield, a little bit more US focused. But of course, this one, since it's only the Harvest covered call ETFs, there's no management fee. Very important to differentiate there. And then, of course, the last 2 is where I have my Bitcoin and Ether, 30 grand each, so 4% each. I'm very comfortable with that. I would only invest in crypto and this kind of stuff because of the covered calls. It's literally the only reason I'm investing in it. It's not because I love Bitcoin or Ether. I don't really care. It's an asset. It's here to stay. And I think it could be interesting for the future. And, the really rich yields and premiums, honestly, really helps. So let's move on to the split share fund now. Everyone's favorite, right? All right, so split fund. Sorry about that. I didn't freeze frame the first row. Now I did. So let's go through them one by one. These are my split funds. Very very high yield. Very very popular in Canada in terms of getting yield. So you have DFN, which is Quadravest flagship split fund. It's also the biggest split fund in Canada. By the way, it's worth over $1 billion if you combine the value of the NAV of the Class A and the preferred. I think it's like 1.4 billion. So definitely one of the most popular ones. You have the 15 best Canadian, 15 plus Canadian dividend stocks here. So very, very similar to what DS has, except that it's a split fund, so it has higher yield because it's leveraged. So I'm making 15% yield here. Very, very solid. Yeah, so each comment, by the way, each my annual dividend case for each split fund, I kind of put a note here. And when I say the first dividend, so when this fund came out and how many distributions it missed, and if I personally missed any distribution. So DFN only missed 4 out of 212 dividends. All the misses were in 2020 because of the COVID crash. So those are the only 4 that I missed. Very, very solid track record. FTN is Financial 15, Quadravest second most popular, biggest split fund. So like the name says, focuses on financials, 15 financial stocks, so 60% US, 40% Canada. I'm making a low yield here because there was a reverse stock split in December 2020, which basically I lost 60% of my shares. But imagine that even with that, I'm making just under 11% yield. So this fund missed 34 out of 215 dividends. Keep in mind, it's the information's outdated, so it's this is as of December 2021, so I got to update it. I will do that for next time if I remember. The next ones are from Brompton. Brompton have amazing split funds, probably my favorite split fund manager of all time because of the diversity. So one of the best ones, you have LBS, which is the big 6 Canadian banks, the big 4 life insurance, doing really well, making a great yield on it. SBC, very popular. It's just the 6 Canadian banks. They allocated 25% more shares. So I gained 521 shares basically in December 2021, and they only missed 4 distributions. Really, really good for distribution misses. LBS, by the way, missed 18 out of 181, so not so bad either. GDV is probably my favorite split fund. Because it's the global dividend growth stock. So it's very, very diverse. It's actually very, very similar to what ZWG does, except it's a split fund. And, as I'm reviewing this, they're actually having an overnight offering. So I might buy more tomorrow. So don't be surprised if this number is like 50 or 55,000 next month. So GDV, really like it. Obviously, you could tell by my position here, a big position, which will probably get bigger. Never missed a dividend, but this fund is a bit newer. It's only been around since, it's not even 4 years yet. It's almost 4 years. So really, really good. Very, very well diversified. I would say it's a very safe split fund. DGS is kind of like DFN's competitor. So like DFN, it focuses on Canadian dividend stocks. It's a little bit more aggressive with the yield because the NAV is lower. But what I like about it compared to DFN, it's a little bit more diverse. It has like 25 to 30 stocks, whereas DFN's a little bit more concentrated, especially in the bank. So a little bit more diversification. I would consider this more of a higher risk split fund, medium to high risk, because it does miss dividends, and it's missed 24 out of 168. So still pretty decent, but it's to be expected, right? To have more yield, you're gonna basically expect more dividend misses. PWI is a very unique one. It's the first ESG split fund, so focuses on companies that have to do with sustainable power and infrastructure. Really, really cool. Hasn't been doing great lately, but green energy hasn't been doing great. That's why. But it's getting closer. I think it's still trading at a premium, but it's getting closer. So sorry, I didn't really talk about it, but the most interesting split funds right now, the ones that are trading at discounts, is really ENS. PWI is getting there. It's narrowing. DGS and DFN typically always trade at premiums, but they're not that big. FTN is also trading at a premium. And LBS, SPC, I'm pretty sure trading at a small premium as well. So I'm just trying to tell you guys, whenever you're looking to invest in split funds, always make sure to check what the NAV is and compare it to the stock price. I talk about it in other videos, so I won't dwell on it here. So let's continue. That's PWI. You have ENS, which of course is how I get my Enbridge exposure. It's the only split fund out there that focuses on one company, Enbridge. Really, really cool. And I'm excited to tell you that I have a great Q&A coming up with Middlefield, where I talk to Dean and the CEO of Middlefield, and we talk about ENS and RS in detail. Rob Lozon, sorry, that was his name. So I actually talked to the guys who manage these two amazing split funds. So ENS Enbridge, RS, like the position shows you here, really love it. It's where I get all my real estate exposure. So RS holds the 15 plus best REITs in North America. So things like Killam Apartment REIT, Canadian Apartment REIT, RioCan, Smart Centers, Crombie, Northwest Healthcare, a lot of great REITs, all the best REITs that you need. So this is kind of like an all-in-one for real estate, and the yield is really awesome. You won't get that yield with the single REITs. So last but not least, I won't really go through them. These are the single stocks and REITs that I have left. So eventually I will be probably getting rid of pretty much all of them eventually with time. And of course, I still have my Canopy Growth stock. This is my only stock that doesn't give me income, is basically this one here, and it's starting to pick up a little bit. I'll probably sell it off eventually, but I'm not sure when. So here is the portfolio, guys. In a nutshell, I went through each one of my funds. You know exactly how much I put in each one, how much yield I'm making, and total right now. Let's go through the totals. It's a little under 85K a year, $7,059. This is Canadian, every single month on average of passive income. So if you add this number, 7,000 Canadian, to the 33.29 USD, you get about $11,000 a month in passive income. So I just wanted to show you that. So that is, a summary of my portfolio. So overall, I'm making an 11.55% yield. The yield has increased from last month because of all the switching from the sector or single covered call ETFs into the all-in-one fund. So I've increased my yield dramatically because of that, and my income. And you have my split here as well. So as you can see, my main focus here, my main income driver is really those split funds and ETFs. If you're wondering, well, you have 38% of your money in split funds, isn't that kind of risky? Well, I would say it really depends on you and your personality. And what I like to say is that most of the exposure is really with, in my opinion, the low risk split funds. So having a lot of exposure in split funds is okay, especially if you have most of it is the lower risk split funds like RS, ENS. I would say GDV is down there. It is a low risk one. SPC is pretty low risk, and DFN is not so bad. So the majority is really in the low risk ones, not the high risk ones like DGS or FFN, which I don't even have. So just wanted to make sure. Put in that comment there for you guys in case you had the question. So you have any questions about my portfolio? This is literally the portfolio from A to Z. So hopefully you don't. And once again, a reminder, you could download this on my website, passiveincomeinvesting.ca. Absolutely free. It's the very first download. So there you have it, guys. My entire portfolio, all 6 accounts in black and white from A to Z. So as you can see, especially if you're a long-time follower of this channel, I own what I preach, right? I wouldn't feel comfortable suggesting any funds without first owning it myself or intending to own it in the near future. So keep in mind, again, a reminder, you could download it for free on my website. A lot of people keep asking me, can you send me a blank version of your portfolio? I like the style. So in the latest download, one of the tabs is blank portfolio. So you could always use mine and delete my data, but I left you guys a blank portfolio version there, so you could just fill in your information if you like the template. Another thing, keep in mind, guys, that again, I'm a pure income focused investor, right? And I really go after high yield and high income, the consistent cash flow, not capital appreciation. So it's a strategy and style that really fits my personality and my needs. It helped me become financially independent. So at a relatively young age, so I know it works, I know it's consistent, and I know it's good during sideways markets or volatility. So that's where the covered call strategy shines, because your income is very, very protected. This is why I love it, and this is why the covered call strategy is typically referred to as a defensive equity strategy. So again, I'm not against the popular growth strategy or the dividend focused strategy, not at all. The important thing is that you invest. So make sure you invest for the future, guys, and choose whatever strategy works best for you. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button, hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission, will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and when they become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.